Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get straight to the headlines. Indian markets failed to hold on to early gains. The Nifty looks all set to close lower for a fourth straight session.
India's gold jewellery sales fell by 25% in the July to September quarter, says the World Gold Council. Predicts demand falling to a 7-year low in 2017.
Tata Motors, HPCL and Aurobindo Pharma are the three Nifty companies coming out with earnings today.
US President Trump says China is taking unfair advantage of American workers and companies, but blames his predecessors for the situation.
Coming up on the show today, we'll bring you a slice of an exclusive conversation with the UP Chief Minister on how to reach a solution on the Ayodhya issue. MS Unnikrishnan of Thermax talks about green shoots on capital investment and what that means for the capital goods sector. Gopal Mahadevan of Ashok Leland says he expects a 5 to 10% growth in the industry in the second half of the year. And we talk global markets with Jasper Lawler of London Capital Group.
All right, we'll get to all of that in a moment, but let's start with the markets. Neeraj is here to take a closer look at some of those stocks that have been moving today. How's it looking, Neeraj?
Flat day of trade, flat for the volatility as well. So after 3 days of heightened volatility movement, in today's session, the India VIX is hardly showing any kind of a movement. So pretty lackluster if you look at the headline numbers. As always, within those headline numbers, you will have enough and more stocks moving around. So pharma, interestingly, is under pressure. I would have thought at the start of the trading day today, there with Taro reacting the way it did to its numbers, maybe there could be another day of green for Sun and a couple of others, but that's not been the case. In fact, there are some shorts that have been built into Sun, Cipla and a couple of other names. Let's wait and watch what Aurobindo delivers in the session today. It's a bit of a bounce back day for the telcos. I'm classifying Reliance also as a telco, so to say. But Reliance and Bharti Airtel have had a bit of a bounce in the session today after getting butchered. Reliance more so in November, but Bharti fell yesterday because of that block deal. And both of those stocks are coming up in the session today. And what's falling down after days and weeks of gains is ONGC. But crude has corrected. I think third day in a row now that we're seeing crude oil just slip a little bit, and that's having its impact on the big boy. 186 now, after nudging those 199 odd levels 2 or 3 days ago, ONGC has come off under a bit of pressure as well. Just 2 or 3 mid caps that I wanted to highlight, and 2 result reactions, quite frankly, because both of these did very well in the quarter and the market is duly rewarding them. One of them is, of course, Pidilite. Exceptional quarter. I think the commentary was pretty good as well. They spoke to us and spoke fairly optimistically about the quarter ahead, or quarters ahead, let me rephrase myself. So Pidilite did well. Bombay Dyeing, again, an exceptional quarter, but primarily driven by real estate. So that one, 4.5% higher, yes, which is not a bad day of trade for this one either.
All right, Neeraj, thanks so much for that. That's the equity markets. Today, we've actually got news on all markets, equities, currencies, commodities. Let's go to commodities now. Demand for gold jewelry in India fell 25% in the July to September quarter. That's a significant fall. Demand was impacted by a couple of factors: the introduction of GST, tougher anti-money laundering rules linked to the purchase of gold, and also some sluggishness in demand. Pradeep Pandya is with us with the highlights of a report from the World Gold Council. Pradeep, that's a significant fall, a 25% fall in both volume terms, and value was also, I think, 28% lower.
Definitely. So 25% decline in volume is really interesting. So last 3 quarters saw some kind of an improvement, but then again, this quarter was really disappointing in a big way. And as you mentioned, there were 2 major reasons, as the World Gold Council has also put forth, is GST and Anti-Money Laundering Act. Now, they believe that because 70% of the industry is actually, it comprises of smaller players who found it really difficult to adopt GST well in time, and they'll probably struggle for a few more quarters, but there should be some recovery going forward. As some of them will definitely be able to cope up with GST in this quarter and next. And money laundering bill also got amended. That is another relief. So maybe this quarter, the October, November, December, these 3 months won't be as bad as the previous quarter. But nonetheless, the last quarter was really a big disappointment, not only because the jewelry demand fell, but also the investment demand fell from around 40 tons to 30 tons. And that is mainly the bars and biscuits, not really ETF. ETF is still very small in India. So investment demand it comes through bullion, actually. But what is also interesting is, like you guys had mentioned earlier, that the demand is likely to fall to a 7-year low. In fact, for second year running, the demand will be below 5 years average. And that is really interesting, that maybe there could be a slight medium-term or long-term trend which is emerging in Indian markets. And that is the question I asked to the India Director of World Gold Council, Mr. Somasundaram PR. Let's listen in what he had to say about it.
Yes, we did some analysis some time back, econometric analysis going back to 25-year data and linking gold demand to how it has behaved in response to various factors. One thing came out clearly: increase in income is the prime driver behind gold demand. Then comes inflation, then comes gold price, and then monsoons. Okay, these are some short-term factors as well. So, but what we saw clearly was, for every 1% increase in income, there is a 0.9% increase in demand. But for every 1% increase in price, there is only a 0.5% drop in demand. So that is, this is what the analysis showed. So clearly, income drives gold demand, because it's very clear part of the income goes into savings, a part of the savings goes into gold, and that is structurally the case in India for the households. So given what we are seeing, rural income being doubled by 2022, GDP growth, we do expect that these factors will be hugely positive for gold demand.
So World Gold Council definitely believes that there is not much investable surplus with Indian households that is probably responsible for the slump in gold demand. But as we can see, there is enough money flowing into the mutual funds, into equity, and that's the trend globally. Actually, if you look at the global flows into ETF, they have also slowed down in a big way. Money is flowing into equity funds rather than gold ETFs.
Very interesting.
Interesting that 25% fall is quite significant, given that we are a gold-obsessed country, even otherwise. Let's talk about the currency now. The rupee is trading above the 65 to the dollar mark on Thursday. It seems renewed depreciation in recent weeks as oil prices have risen. The moves in the currency have brought back the debate on how tightly the Reserve Bank of India is actually controlling the currency. JP Morgan believes that the Urjit Patel-led RBI is actually slightly more willing to let the currency fluctuate on its own when compared to the RBI led by Dr. Raghuram Rajan. Bloomberg News' Shubhadeep Sarkar is here to give us a sense of what JP Morgan is implying. Shubhadeep, thanks for joining in. What is JP Morgan's view?
Yeah, Harsha, I had an interesting conversation with Mr. Brijen Puri, who heads the financial markets for JP Morgan in India. JP Morgan is one of the big foreign banks in India which sees a lot of flows on the currency side. So one interesting thing which kind of came out in the conversation with Brijen was that he feels that the RBI under Dr. Urjit Patel has been much more open relatively to his predecessor, Dr. Raghuram Rajan, in terms of letting the currency move two ways. Under Dr. Rajan, the currency was more a kind of a depreciating band. Let's remember that Dr. Rajan took over 2013 at the height of the taper tantrum, when the main focus of the central bank, of course, was kind of adding to reserves, because the reserves were considered insufficient, which saw the rupee come under pressure and drop to live flows at that point of time. So that was the key reason for Dr. Rajan's building reserves and kind of following a more buying dollars kind of in the market. Of course, under Dr. Patel, the macros, he took over under much better macros. So obviously we are seeing much better two-way movement, and the RBI is intervening both on the upside and the downside. Please remember, with this crude oil spike we have seen, that kind of makes things more interesting, because once the crude oil spikes, it again starts affecting Indian macros, as we saw in the reaction to the bond market and the rupee market over the past week. I mean, a lot of India's improvements in macros was due to the benign crude oil prices. So on the crude, probably the strategy RBI has is that a weaker rupee feeds into imported inflation. That's one area probably which is probably in their minds when they're letting the rupee move more relatively flexibly on both directions.
So if I understand this right, yes, under Urjit Patel, macros have been better, oil prices have been relatively low, we have a fairly decent forex reserve. Are they implying that he is willing to move and intervene in the market a lot more aggressively on both sides vis-a-vis Rajan. Am I getting that right?
Exactly. I mean, what he's saying is that what Brijen is saying is that basically they are seeing RBI more willing to intervene on the upside also when the rupee is appreciating as well as on the downside. So basically, it's a more flexible two-way band that what Brijen is saying that the RBI is following.
All right, Shubhadeep, thanks so much for that. That's on the currency side, and this is a debate that has been going on ever since Patel came to the RBI. Just switching focus to bond yields, meantime, bond yields have been rising once again. Liquidity in the banking system has started to tighten, and that's one reason. Just want to bring up a couple of charts on what's happening in terms of bond yields, liquidity, and the banking sector. Start with the 10-year yield. The 10-year yield has been inching higher, as we've been saying. So, you had a series of factors, if you bring up that chart, that have pushed yields up. First, it was fiscal concerns, then it was oil prices, and now it is questions about how liquidity is shaping up from here. If you want to see how liquidity has moved, the chart coming up on your screen, which is the Bloomberg Intelligence Banking Liquidity Indicator, will sort of explain that to you. There has been a tightening of the surplus liquidity conditions. That white line is neutral liquidity, and the gap is telling you how much surplus liquidity you have. So as you can see, the gap between the neutral liquidity position and the current liquidity scenario has been becoming narrower, which means that liquidity is starting to normalize. One reason for that happening, of course, is the RBI intervening through open market operations and sucking out liquidity. But now, even in the normal course of things, liquidity is starting to tighten, which will come through in the next chart that you put up on your screen, which is the Nomura indicator, which maps credit growth and deposit growth. So in a report that came out yesterday, Nomura pointed out that credit growth and deposit growth have started to converge, which means that from here on, surplus liquidity conditions will probably not persist for very long. This morning, we had the SBI chairman, Rajneesh Kumar, speaking at an event, and he talked about the fact that in summary, all of this is probably going to mean that any expectation of lower lending rates is probably not going to fructify from here on.
Just one quick point on that, Ira.
Yeah.
The spike in deposit growth was fueled by demand.
Yes.
So this was a natural progression, wasn't it?
On deposit, absolutely. This had to normalize. What has happened is that credit growth has started to pick up as well as deposit growth has fallen off. So that gap is narrowed. So you can see there, when demonetization happened, deposit growth spiked, credit growth fell. So you had this, massive amount of surplus liquidity. As you have moved along the months, deposit growth has normalized, credit growth has started to pick up. It's about 7.7%, so not healthy by any means, but still better than it was at the lows, which was about 4%. And the resultant convergence means that surplus liquidity will probably start to die down from here.
Interesting that. Let's talk about credit growth. There might be a slight revival in credit growth, but bankers are still struggling to clean up their books. The country's top lenders will meet to resolve the cases in RBI's second list of stressed companies. The deadline to resolve these cases is on 13th of December. Vishwanath Nair is standing by on what the agenda of that meeting is. Vishwanath.
The Indian banking system is gearing up for a round of marathon meetings to be taken up in the later part of November and the early part of December. This is pertaining to the second list of stressed accounts that the RBI had sent to the bankers in August. These accounts, which there are about 30 or 40 of them in the second list, they are slightly smaller than the first list of 12 stressed assets which were sent to bankers for immediate action under the Insolvency and Bankruptcy Code. The bankers have time till the 13th of December to resolve these cases with the available restructuring tools, failing which all of these cases will automatically go to the NCLT for insolvency and bankruptcy proceedings. Now what the bankers will be looking at is various tools that are available to them: SDR, the strategic debt restructuring tool, S4A, and even some form of deep restructuring wherein they sell some portion of the assets and restructure the remaining accounts. These are all available options, and they will be looking at these options so that they can resolve these cases outside the NCLT. Now the NCLT as such is not shut off to the bankers till the 13th of December. They can go to this route if they feel that nothing else is working out. But typically the provisioning that is required for cases under the Insolvency and Bankruptcy Code is higher. Companies which go to this case, the bankers have to provide about 50% of the secured exposure in those companies and 100% of the unsecured exposure in those companies. So bankers are typically wary of going through the Insolvency and Bankruptcy Code. However, what is happening is the government has announced announced an over 2 lakh crore recapitalization exercise for the public sector bankers in India who control a large part of the debt that is in question. So they will be in a better position to negotiate and thereby write off some of the bad loans which may be discussed over these meetings.
All right, it's going to be a hectic month ahead till that deadline is reached. Let's get on to the earnings season now. We've got Aurobindo Pharma coming in today, HPCL and Tata Motors. Darshan, Somit and Yatin are standing by with the individual details and all of that. Let's go to Darshan first on Aurobindo Pharma. Darshan, what are you expecting?
See, we're seeing a close to 9% top line growth, a bottom line growth of 13%, EBITDA growth of 14%. That means that EBITDA margins will come in close to the 26% mark versus the 25% mark that we saw last time around. The US business is expected to do well, and that is on account of a drug called Renvela. So they've launched this drug in which, they see substantial upsides that will come in. So $30 to $35 million will come in into the Renvela tablets, and another $3 to $4 million will come in because of the Renvela suspension drug that has happened. So that's the big move why Aurobindo will come out with strong numbers when other companies in the US markets have seen a degrowth. Pantoprazole is one of the drugs that was there in the US which faced significant amount of shortages. So Aurobindo will benefit because of that. Apart from it, the emerging markets and Europe will be rather stable. The API business is expected to come in slightly muted this time around. But more than the numbers, I think it will be the commentary, what the management says, whether this run rate is possible, because the street tends to believe that it will be a one-off because of Renvela, whether this momentum will continue. That only the conference call will say. But apart from it, in a rather weak market, US markets, Aurobindo will come out with stable set of numbers.
Darshan, thank you for that. The country's third largest oil marketing company, HPCL, will also be reporting numbers today. Somit is standing by to tell us what the street is expecting. Somit.
So on a standalone basis, HPCL is expected to come out with a strong set of numbers. Though revenue would be marginally higher at 253,204 crore rupees, net profit would almost double to 1,996 crore rupees. EBITDA is also expected to rise by 97% to 3,200 crore rupees, while margins will be expanding by around 300 basis points to 6% in this quarter. Now, gross refining margin, that is the key number for an oil marketing company, is expected to come in at $9.7 per barrel versus $5.9 per barrel in the last quarter. Now, sequentially, this is a strong quarter for the oil marketing company on the back of strong refining margins, strong volume trends and inventory gains. Now, in the second quarter, the company is expected to report an inventory gain versus an inventory loss of more than 1,500 crore rupees in the first quarter. Now, crude throughput is expected to remain in the range of 4.3 to 4.7 million metric tons in this quarter. Though refining business would see an uptick, but marketing performance could be subdued on the back of digital discounts that the company has given and on because of GST impact also. Now, petrol and diesel marketing margins in this quarter remained at around 2.4 rupees and 2.3 rupees per litre. However, the gross refining margin and the management outlook on the gross refining margin will be a key thing to watch out for.
All right, Somit, thanks so much for that. Moving on to the auto space, Tata Motors is the one that's announcing earnings from that sector today. Yatin Mota has the details on what to expect.
For Tata Motors, this time in the second quarter, we are expecting healthy performance coming in from JLR as the foreign exchange related losses narrow for the company. Of course, on a consolidated basis, the situation will be challenging, at least on the operating front, wherein we are not expecting good growth coming in. As far as the revenues are concerned, we are expecting the top line to be close to 68,900 crores, a growth of 5% year on year. EBITDA growth will be seen at 7% on an absolute basis. Margins more or less should remain stable on a year on year basis. However, profits should see a sharp jump because of one-off last year same quarter. Profits are expected to be 1,850 crores for the consolidated entity. But clearly, if you look at the standalone business, the losses there will continue. Brokerages are expecting a 600 to 650 crore kind of a loss for the standalone domestic business. Of course, because of the improvement in volumes, we could see some margin improvement for the standalone business. But the focus area clearly will be Jaguar Land Rover, and JLR revenues are expected to increase 6% for the quarter on a year-on-year basis. However, the EBITDA or the margin performance will be closely watched for. This time we are expecting the EBITDA margins to be close to 10.8%, improvement of 50 basis points year on year. And if you look at brokerages like Kotak and Nomura, most of them are expecting foreign exchange loss of 350 to 450 million British pounds. So that is something important we'll be watching out for. Of course, the margin trend for JLR is something important everybody will be watching out for in the management commentary. On overall basis, expect a muted quarter for Tata Motors on a consolidated basis this time.
Yathin, thank you for that. More auto news. Ashok Leyland reported a healthy growth in sales in the quarter gone by. Margins took a hit due to heavy discounting. Gopal Mahadevan, Chief Financial Officer at Ashok Leyland, says the commercial maker has been unable to hike prices. Listen in.
I think one thing that is very concerning is the way the industry is looking at pricing. The level of discounting has become unprecedented, and frankly, we don't participate in businesses which don't make financial sense to us. We believe that we should acquire customers, but they have to be done reasonably profitably. But if I were to take a guess, what I would say is that if the investment-led growth strategy of the government were to be rolled out quickly, if we see a revival of the GDP and the growth in the Indian economy, I still feel that it is quite possible that second half could see quite a bit of recovery on an overall year basis. It is possible that the total industry volume could grow by about 5 to 10%.
All right, so that was Ashok Leyland saying that they do see some pickup in the second half of the year. Remember, commercial vehicles is a very sort of economy-linked sector. The other sector, which is equally linked closely to the prospects of the economy, is the capital goods sector. We had a conversation with the management at Thermax, and remember, this is a company that didn't report particularly great revenue growth in the second quarter, but the order backlog had picked up. So when we spoke to Mr. M.S. Unnikrishnan at Thermax, we asked him where these orders were coming from, and some of the takeaways were very interesting. He said that some of the consumer-facing industries are starting to show capex. He's talking about a whole host of industries, smaller ones like dairy, slightly larger ones like pharma. And he also said that inquiries from the cement sector are starting to pick up. Where there is no pickup is steel, power, and no surprises there. Hear him out.
The current quarter is an exception for the entire industry because if you recall, at the end of June, the Government of India has very clearly mentioned that input tax credit will be available for another one more month or a grace period of 30 to 60 days for various industries except capital goods, which meant the entire month of July went for most of us to reset with the new GST and regime. And to be precise, predominant part of the industry started billing only by third week of July. And the larger companies could only start it by almost maybe towards the end of July. So there was a virtual miss of, I would say, a month for majority of the companies. If GSTN were not to be there in the current quarter, maybe we would have been up in revenues by at least 5 to 7%, as against a -6% which we have reported. Same is the case for everybody, barring maybe the construction-oriented engineering companies. That's the point number one. On the order intake side is, I'm also seeing it across the country. In majority of the capital goods companies, we are seeing a minor uptick in the order intake. And I don't want to make a statement that things are totally turned around. But there are segments where the investments are happening without much of a difficulty. And this is a customer-facing industry, or the consumer-facing industry. Not much worried about what's happening to the country, the growth prospects and the commodity prices, etc. And I'm also seeing some positive movement in the cement industry. A couple of new projects being announced, orders being placed, and also the waste heat recovery based captive power generation picking up in that particular industry. That's overall take to talk about.
Sir, on the order side, so basically you're suggesting that some of the consumer-focused industries like perhaps auto or maybe consumer goods, there where capacity utilization numbers are higher, perhaps in some cases above 90%, that's where the inflows are coming in. And cement seems to be one-offs, right? Some regional players are adding a little bit of capacity.
That's correct, but I am also seeing a lot more of inquiries coming from the cement industry in anticipation of an improvement. But they are all looking forward to the government's new infrastructure push, which should certainly be benefiting both steel industry and cement industry. And normally, if they decide to put up a new capacity, it would take anywhere from maybe 28 to 36 months, which means a 3-year period for a cement plant to be ready to commission. So that's why many of them are looking forward to a consistent growth in the road building of the country, with Bharatmala coming in and Mr. Gadkari committing almost 600,000 or 6 lakh crores of rupees for construction. So I think there is an uptick going to be happening in that industry. Apart from the ones that you mentioned about, I'm also seeing a good amount of movement in textile industry, alcohol, beverages, Pharma is also, despite whatever you guys may be worried about USFDA and the kind of share price movement, many who have developed their intermediaries and maybe out of the patent regime are also looking forward to expanding the capacity because medical consumption in the country is really going up. And food processing is another industry where I'm seeing, irrespective of whatever is happening to anywhere, anything to do with the economy, unabated investment happening and many more new players getting into that. Some small scale industry becoming medium, and medium guys are becoming fairly large in investments. So that dairy industry, there are 10 projects ongoing currently in the country. So like the way you mentioned about consumer facing industry, looking at the income generation happening and the growth happening at whatever level, people are investing in creating new capacity. But it is not applicable to steel industry, it's not applicable to oil and gas. I mean, power, just forget about it. So that's infra oriented, it's at a standstill, but other areas, there's a movement happening.
MS Unnikrishnan from Thermax. Up next, we're going to get you some market voices from the Axis Capital Conference on what they're betting on. Neeraj moderated a panel with Ashish Nigam, Dharmesh Mehta and Salil Pitle. That's coming up on the other side.
Welcome back. You're watching Power Lunch on Bloomberg Quint. Let's take a look at the headlines. Indian markets fail to hold on to early gains. The Nifty looks set to close lower for the fourth straight session.
Gold jewelry sales fell by 25% in the July-September quarter, says the World Gold Council predicts demand falling to a 7-year low in 2017.
UP Chief Minister Yogi Adityanath says the Ayodhya matter should ideally be resolved through talks, courts or in any other means. He also says that he's expecting a respectable ruling from the Supreme Court.
US President Trump says China is taking unfair advantage of American workers and companies but blames his predecessors for the situation.
And air pollution refuses to subside in Delhi, forcing the state government to contemplate a reintroduction of the odd-even rule with immediate effect.
All right, quick check on how the markets are faring at this point in time. We're not seeing too much action, but the bias has been rather negative.
Yeah, I think bulls will be really disappointed today because this morning when we came, market had already declined quite a bit over last two sessions. So we're kind of oversold in short term, immediate term, more to say so. And crude yesterday kind of retraced almost $1 whether you look at Brent or NYMEX. That's a big relief for Indian markets and currency actually. But after the gap up, we actually failed to sustain. And even if you look at the distribution of option data right now, bulls are not really eager to protect 10,300 levels. They are rather building positions at 10,200. 10,100 and 10,000 levels, which means probably there could be more downside that's possible, or maybe after a bounce we'll again probably retrace the lower levels. So those possibilities remain open. In all, I can say that bears probably still have an upper hand in markets as we look at the things right now. Although there is some recovery in banking, there is also some buying interest in select mid-cap and small-cap stocks. So if you talk about the stocks and sectors, actually, the pressure is definitely from banking side. Private banks like HDFC, Axis Bank have come under pressure. Heavyweight like ITC has fallen. And also among mid-caps, we have Reliance Capital that continues to fall for third or fourth session today. GSFC came out with disappointing numbers. So there is some selling at that counter also. But on the positive side, as I mentioned, some good numbers are also rewarded like Petronet, LNG and Rain Industries. And select demand that I was talking about is emerging at counters like Tata Global, for example. You have a Dewan Housing, which has been an outperformer, corrected for a while. Now there is demand picking up. An Indian Bank, which is kind of recommended as the best bank among all the mid-cap PSUs, has seen significant demand in today's trade as well. So there is some buying interest, which is, I would say, limited to mid-cap and small-cap. Still, there is no leadership in the large-cap stocks. One of the heavyweights have to kind of take a leadership and start moving up. That will probably pave the way for a recovery.
All right, Pradeep, thanks so much for that. Speaking of the markets and views on the markets, Axis Capital was having an investor conference today. Our team was there trying to gauge what the Axis Capital team thinks about markets, the economy and sectors that they're betting on. Here are a slice of that conversation.
I think there's been a change in the way people are seeing autos. It's a very good way to play consumers in India. It's a relatively inexpensive way to play it compared to staples. And there are all clean companies, good balance sheets, good return on capital. So, which is why auto sector is being re-rated. And so, people looking at valuations as how it was compared to historical averages is not the right way to see it. So, good companies which we have in our conference as well. I mean, they might be expensive, but if you look at it as a way to play consumers in India, it's relatively a cheaper way to play it.
Yeah. Okay. Now, before I talk about insurance with you, Salil, Dharmesh, I just want to get this question to you. You're a man who's, and I've known you for a number of years now. You've tracked various cycles as well. Typically, companies and sectors and themes used to follow a cycle. Nowadays, what we've seen, there are a bunch of these sectors which don't really see too much of a trough because cycles are getting compressed as well, so to say. We don't have too long a down cycle, and with the fund flow coming in, the nature, it's being bought into. To your mind, here on, the next 3 years, the message that you're sending about this space, again, I know that you've gotten companies across the sphere, but what are the themes, what are the cycles that you believe will be the top of the pile over the course of the next 3 years? I'm not asking for 12 months or 6 months.
So I'll tell you one thing, as I said, these two events, GST and DMAT, it's never happened in the history of India. So it's all the first time. So everything has been tested today. Even me with an experience of maybe 27 years, still don't know what is going to happen next, right?
Really?
Because nobody's seen that. Let's be very honest. Let's not be saying that, okay, we know what's going to happen next. But clearly 1 year before, somebody told me in the last conference that markets will be up 30%. Nobody would have believed me. So clearly cases that nobody knows. But the upside for India, as I said, is a half glass full, half glass empty. But all the benefits of DMAT and GST are now going to flow in. India needs infrastructure. India needs power. India needs cement consumption. All of these are yet to happen. So what you've seen is just maybe a financial services rally and a consumption rally. But you're still going to see the big rally, which is of your main infrastructure, where the spending has to come if India has to grow at 8 to 10%. So all your infrastructure or power has to move. And that's what people are now trying to see, whether the time has come to go into the stocks. Like we had done a Dilip Bilkon IPO last year. It's up almost 4 to 5 times.
Yes.
And in the time when people thought nothing is happening in infra space. So clearly, if you have a good leader, good executor, people are ready to pay the valuations. And because there is a huge upside left, because a lot of things what I've discussed is yet to happen.
But is it time to do that, or is it very, very selective in these themes?
It has to be selective.
Very, very
go
selective.
For the leader, go for the best execution guy, because end of the day, execution is the king today.
Yeah.
So whoever is able to execute, like last few weeks back, we did a real estate QIP of 500 crores, and he got 3 or 4 times demand.
Yeah.
While the real estate sector people think is in downs. Yeah. So if selectively, everywhere people are looking to invest, so that's why the whole conference theme was get India in, because it's not I'm seeing a preference toward only a BFSI segment or a consumer. It's all across. And as you know, we have Sachin Jindal for the market interview. He's going to talk about his entire group, his commodities, cement, you're talking steel.
Yes.
Now, that's what even people are looking at, and JSW has done phenomenally well in the last 1 year.
Yeah.
So it beats me to understand what's going to move. That's why I'll not be over smart and try to go and play themes. I'd rather play individual stocks and see where the investments are coming. You're going to see investment coming in logistics space, infrastructure, waterways, railways, all of them. And don't forget, railways is also going to hit the IPO market soon.
Yeah.
So, and even the defense. So just imagine when I'm talking so many sectors opening up, this can guzzle a lot of money. And the capex there is going to be huge. So the big India show is actually yet to happen.
If we look at the last 6 months, clearly the poster boy, nobody will deny it, in terms of new paper coming into the market has been insurance. Do you reckon over the next 6 to 9 or 12 odd months, it will continue to remain companies in the BFSI theme, or something new is coming up? Dharmesh referred to a couple of spaces. I don't know if those conversations are red hot right now.
So let's put it, the insurance space, the big daddies in insurance have kind of gone ahead and already hit the marketplace. So you do not expect the same quantum of supplies from the insurance side to come in. They will be, 10% dilution itself is a big guzzler. But keep in mind the fact that, people who've done the 10% dilutions have to eventually get to 25%. So there will be paper which will come out from the insurance space, not maybe in the next 12 months, but clearly over the next 36 months time, it's bound to happen. But I think what we would see going ahead will be, some different kinds of the larger papers that one could see. So one area that we talked about, real estate. The outcome of the real estate side will also be some paper which will come out in the REITs form. And believe you me, the kind of companies that will hit using the REITs platform will really be the top-end developers, high-quality paper. It's a fantastic product. Globally, it's such a large product compared to equities market. So one can expect a bit of that coming out over the next 12 months' time. So I think that's an important aspect. He talked about energy and so on. So I think, again, we say renewables as a space is again an area wherein you will see some action. But there's a lot of action happening on the ground in any case. So there will be some of that kind of paper. Then you will see a diverse set. I mean, the kind of paper we are seeing is across retail, across logistics, across services. A lot of them will also have, exits from private equity, which has been the norm in the last period of time. And again, these are high quality companies, well matured, and IPO is just an exit for private equity and for public to participate in those. So some of those stuff will come, and those will be very sector agnostic.
Well, that's the management of Axis Capital. US President Donald Trump, meanwhile, has touched down in Beijing. He hopes to get a win on everything from America's trade deficit to North Korea. Bloomberg's Tom McKenzie joins us from Beijing to tell us what Trump's agenda is and what's been achieved so far. Tom.
Yeah, well, really, it's about some big letter deals that have come out. They expect the US side to sign, or have signed by the end of this visit, about $250 billion worth of deals. We've had some of the information, some of the detail come through this morning here in Beijing. One of the biggest deals is Boeing signing a deal worth about $37 billion, selling about 300 aircraft. We've got the likes of Qualcomm, the semiconductor maker, signing a deal for about $12 billion for some of China's smartphone makers. There's one of China's big energy companies, Sinopec, involved with a number of different finance companies, including China's sovereign wealth fund, in a deal worth about $43 billion that might involve infrastructure spending around LNG in Alaska. So there have been some big ticket deals. A word of caution on those, though. A lot of them are linked to or are MOUs, memorandums of understanding, non-binding rather than contracts. So some of them may not materialize in the end, but still some tweetables, some deliverables for President Trump on this visit. In terms of the trade deficit, you mentioned that's been a big bugbear of President Trump, and he said that it was shockingly high, but he didn't blame China in a speech in the Great Hall of the People earlier today. President Xi, on his part, said that this had been an historic visit, and he promised to continue opening up China's markets to foreign investors. Later on today, both presidents are going to be sitting down with their teams for a state banquet in the Great Hall of the People.
Very quickly, Tom, how does Beijing see this visit? And do they see this as an opportunity to reset their relationship with the United States?
Well, from the analysts that we've been speaking to so far today, it seems to be that China has laid out this game plan for this visit, which is lay on the pomp and ceremony to flatter Trump's ego, give him some big ticket deals around business that he can take home and tweet about, but don't make any big concessions when it comes to the trade relationship. We've heard nothing from China. They haven't given us any details on changes, for example, to market access into sectors like the financial services or autos, no changes to the joint venture structure details, no details or no changes or measures put in place on North Korea that are any different to what we've heard previously from Beijing. So what it seems to have been the plan was to give him these deals, flatter him, but not to make any major concessions. That's what we've had so far. And as I say, we've got the state banquet, and then President Trump moves on for the rest of his Asia tour at tomorrow morning, Beijing time.
much of what these visits are about is about the atmospherics and the chemistry. Was President Xi Jinping and President Trump, has there been any sort of personal chemistry that's been stuck out? Is that the buzz in Beijing?
Yeah, you're really absolutely right to point that out. And you'll remember that back at Mar-a-Lago in Florida, they formed this personal bond. At least President Trump seemed to think that they did. And it seems to have been reforged, if anything, this personal relationship between the two leaders during this visit. And President Trump really heaping on the words of warm praise earlier this morning regarding his hosts here, saying that he felt a real chemistry with President Xi, that he felt real warmth, thanking him for a banquet that was laid on for himself and Melania at the Forbidden City, which is just behind me, last night. So it does seem that there's a strong personal relationship, and clearly that's a positive for investors, because if tensions do bubble up again between China and the US, then maybe the two presidents can get on the phone and take the heat out of some of those tensions. But those tensions remain. As I say, the big structural issues haven't been addressed, and there will be concern amongst some executives in the US that more measures haven't been addressed in terms of market access.
Tom, good talking to you. Thank you so much indeed for joining us. Tom McKinsey reporting from Beijing on President Trump's visit.
All right, keeping it with politics but bringing it back home, it's been the most contentious political legal dispute for nearly as long as India has been independent. 25 years after the fall of the Babri Masjid, the Ayodhya issue is still being argued in court. In a Bloomberg Quint exclusive interview, Uttar Pradesh Chief Minister Yogi Adityanath tells Sanjay Pugalia that he'd like to see the matter resolved either via talks or via the courts, or actually any other way.
अयोध्या के मुद्दे को लेकर के हमारा मानना है कि उसका समाधान होना चाहिए, बातचीत से हो, न्यायालय के द्वारा हो या फिर किसी अन्य प्रकार से हो, लेकिन समाधान निकलना चाहिए। प्रदेश सरकार इसमें पार्टी कहीं नहीं है। भारत दुनिया का सबसे बड़ा लोकतंत्र है, और जिस दिन बातचीत से हम अयोध्या की समस्या का समाधान कर लेंगे, लोकतंत्र के मूल्य और जीवंत हो उठेंगे, सौहार्द का एक नया वातावरण पैदा होगा। हमें उस दिशा में बढ़ने के प्रयास करना चाहिए, लेकिन वह दोनों पक्ष ही आपस में करके दिखाएं। हो सकता है दोनों लोग बातचीत कर रहे हों और दोनों पक्ष मिलकर के जनभावना का सम्मान कर लें, तो इससे बड़ी बात और क्या हो सकती है। तो ये चीज़ें अयोध्या के परिप्रेक्ष्य में चल रही हैं, लेकिन न्यायालय में भी इस दिशा में बहुत अच्छा कार्य इधर प्रारंभ हुआ है। 5 दिसंबर से डे टू डे की सुनवाई सुप्रीम कोर्ट में होने जा रही है। हमें विश्वास है कि जो तथ्य हैं, जो जनभावनाएं हैं, इन सब को देखते हुए एक सम्मानजनक फैसला बहुत शीघ्र सुप्रीम कोर्ट के स्तर पर आएगा। अयोध्या में हम लोग गए थे। उत्तर प्रदेश के अंदर जब हम विकास की बात करते हैं तो केवल निवेश यहाँ उद्योग के क्षेत्र में ही नहीं होगा, पर्यटन के क्षेत्र में भी ढेर सारी संभावनाओं को समेटे हुए है। और इस दिशा से हम लोगों ने टूरिज्म के डेवलपमेंट के लिए भी यहाँ पर अलग अलग क्षेत्रों में कहाँ पर हम धार्मिक पर्यटन को बढ़ावा दे सकते हैं, कहाँ पर हम लोग हेरिटेज टूरिज्म को आगे बढ़ा सकते हैं और कहाँ पर हम इको टूरिज्म को आगे बढ़ा सकते हैं, ये सारे स्पॉट भी हम लोगों ने चिन्हित किए हैं और उस दिशा में हम लोग कार्य कर रहे हैं।
All right, you can watch that full interview at 9 p.m. tonight on Rajpath.
Let's talk about Delhi. Delhi has beaten Beijing as the most polluted city in the world, and while state government gets into another huddle today to take a call on imposing the odd-even rule on traffic, thick smog engulfs the city, with farmers in neighboring states like Punjab and Haryana continuing to burn their crop residue after the harvest season. Schools have been shut for the past 2 days. A doctor that Bloomberg spoke to suggested that the entire city be evacuated, as the situation is no less than a public health emergency. Joining us now to discuss about the entire situation is Ronak Sutaria of India Spend, and someone who works very closely with the Breathe Project, an organization that's been collecting air data across the country and in Delhi in a bid to raise awareness. Ronak, thank you so much for joining us on Bloomberg Quint. Tell us, what is the data that you have? How bad is the situation in the national capital?
Yeah, hi. So, the last 2 days, actually, the situation has been completely off the charts. And, this situation has been persisting for about a week or more. The levels that we've been tracking in the Delhi NCR area have been all about 300 right from the 2nd of November. But obviously, in the last 2 days, things have taken a terrible turn for the worse. And the situation right now is we've seen levels of like 800, 900 micrograms per meter cube in the city of Delhi NCR, which, as you know, the normal standard for people is, what the CPCB has said for PM2.5 is up to about 50 to 60 micrograms is considered all right. But the levels that are there right now is, even for healthy people, it's a terrible situation.
Ronak, just stay with us. I'm sorry to interrupt this conversation. We do want to come back to you, but we've got the Tata Motors earnings numbers. I just need to flag those off and try and get a quick analyst take on it before we go back to Ronak. That's the stock for you, but let's try and pull up the numbers if you can. I'm not sure.
2,500 crore on the consolidated net profit as compared to an estimate of about 1,850 crores. So on the face of it, it looks like it's come above expectations at 2,500 crores. That's a consolidated number, though. Let's wait and watch for some more details to emerge. The stocks, as I see, is moving marginally up on the back of those numbers, but that's what we have for you. It's 2,500 crore on the net profit front compared to an estimate of 1,850, but it looks on the face of it fairly decent.
All right, we'll come back to it as soon as we have an analyst online. Ronak, sorry to have interrupted that conversation. I had two questions actually. This is a problem which has cropped up again after last year as well. Can you give us a sense of whether the problem is worse this time around? And I've been reading a lot about how people expect this to ease up by Saturday. What is that expectation premised on? Changing weather patterns, wind direction? What do you suggest is going on there?
I believe, yes, in terms of is it worse than last year, honestly, I don't know the finest of the details, but to a large extent, anything which is above 200 micrograms is considered bad. And so in that context, the situation is equally bad. I mean, I think these, variations of degrees of worseness that we try to decipher, I'm not sure how relevant that is, but it is equally bad. The levels coming down, yes, there is a wind flow that is happening. I mean, the entire PM2.5 trend is moving towards the east now from the north of the country. So it will get slightly better. But I think we need to keep in mind that even levels of 150 and 200 are bad. So as soon as the levels fall down from 500 to, let's say, 300 and 200, letting up and getting a lax on the whole situation will not serve the purpose.
Okay. One final question, Ronak. We've seen the odd even rule play out in Delhi earlier. Does that help materially to these pollution numbers?
There has been a paper that has been put out in May 2017 by professors at IIT Kanpur, and this was, in response to an NGT this thing, and they basically found not any significant impact from the odd even on the PM2.5 levels. So to expect that the odd even will help with the PM2.5 levels, at least the past track record shows that it has not helped the situation.
It's not looking good, and what we've seen so far, the government apparently is looking at options. We wonder what those are, but it's unlivable. As the doctor who spoke to Bloomberg News says, this is a public health emergency. Ronak, thank you so much indeed with your views. That's Ronak Sutaria talking from India's Pen and part of the Breathe project that's looking at air quality. This is a serious situation that the national capital is in. Let's get back to those numbers flashing on your screen on Tata Motors. Consolidated net profit came in at about 2,500 crore. The top line has come at about 70,690 crore. JLR's EBITDA is looking good at about 11.8%. That stock is marginally moving up as we speak. But it's been a beat on most fronts. 70,690 crores as opposed to 68,900 crores on the consolidated revenues. We've got Pramod Amte from CIMB Securities now joins us on the phone line. Pramod, thank you so much indeed for joining us. What did your first gut reaction to these numbers first?
See, on the face of it, the numbers look better than they expected, both on JLR margins and also on the console profit.
Now what they're doing is that Gorgon volume, any Gorgon volume. Well, hear that, Pramod. If you can slightly explain to us, if I can, what did sort of stand out in those numbers for you?
See, as I said, the numbers on the face of the initial cut look better than expected on the JLR margins and the console profitability.
Pramod, what do you make of the JLR margins? They've come in at 11.8%. What were your expectations?
We're at around 12%. So it's broadly in line. We need to get into the forex and all those things. So, but on the face of it, they look relatively better off on the console profit. We were looking at somewhere around 1,800 crores console profit. It seems to be at 2,500 crores. But as I said, we need to get the details.
Okay. What about the standalone business? Do you think that, Tata Motors now will only be a pure play JLR number, or are you seeing any bit of recovery in the domestic business for Tata Motors?
See, in terms of domestic business, there is definitely a recovery on both the CV volumes as an industry and also their aggression towards market share, which is good, and also in passenger car they're participating. This will take some time to get translated into the profitability or margins, as the cost cutting is yet to deliver results down the line.
Okay. What next for JLR? Are you surprised with the numbers for JLR, given the fact that the revenues is up almost 6.3 billion pounds, margins at 11.8%, given the fact that their UK sales number were rather disappointing a few days ago?
See, what's next is basically how they ramp up for the new products. They have just started shipping out Velar, and the product pipeline looks interesting with a new RR Sport and also the E-Pace. So I think the ramp up of the new product volume is interesting to watch out than just the results gone by.
Okay. Many thanks for speaking to us.
Thank you.
It's back to you guys.
Okay, thanks for that, Darshan. That's Tata Motors for you. The numbers on the face of it, as the analyst was pointing out, it looks like it's a beat on across both top line and bottom line. JLR margins are at about 11.8%. That seems to have been about what the street was anticipating as well. Let's shift focus now to telecom. The top 4 telecom operators have now started a price war in the post-paid space, with all of them coming out with new schemes offering more data at the same or perhaps even lower prices. What also comes with it are goodies like free subscription to value-added services and so on. So who's got the best deal in the marketplace? Samit is here with that comparison.
Now, yesterday Airtel came out with a 499 rupees plan. A few days back Vodafone also did come out with the same plan. So let's see how do they stack up. Now Airtel, Vodafone and Idea have a 499 rupees plan for which customers pay around 589, including a GST of 90, which is around 18%. But Jio doesn't have a 499 plan. So the nearest plan is 509 plan, for which customers pay close to 600. So what do they get for this? Now free calls across all networks, including roaming, and along with this they have few additional services like for Airtel it's Wink Music and Airtel TV. For Vodafone it's Vodafone Play and Maxstar. For Idea it's Idea apps, and for Jio it's Jio app. But let's shift focus to something more important, that is data. Now Vodafone and Airtel are giving you 20 GB of data with no data limit or with no data usage limit, while Idea is giving you 30 GB data for a month with a data limit of 1 GB per day. Jio is giving you 60 GB of data with a data limit of 2 GB per day. Now, to bring these numbers into perspective, I'll just tell you that on an average, a customer uses around 4 to 9.6 GB of data per month. So that's when the data rollover comes into play. Now, data rollover means that if you're getting 20 GB of data and you're using 10 GB, you can carry forward the remaining 10 GB to the next month. So if on an average around 10 GB of data has been used, so you can carry forward that, and for that Airtel and Vodafone have kept a limit of 200 GB. Now let's see what the higher plans are giving you. Now Idea does not have a 999 rupees plan, and for Airtel, Vodafone and Jio, customers are paying around 1179, including a GST of 18%. Now the first thought that comes to your mind is higher charges means higher data, but that's not the case every time. Here Reliance Jio does not give you more data, but what it gives you is the flexibility to use the same quantity of data at double the rate. Now Jio is still giving you 60 GB of data, but there's no data limit, so you can use this data anytime and however you want. Now, Airtel and Vodafone are giving you 50 GB of data. 50 GB of data, and along with this, Vodafone is giving you something more important, that is free Netflix usage for 2 months, which is worth around 1,000 rupees. Airtel gives you 50 GB of data and an additional connection with free calls, and other things remain same. For Jio also, it's just 60 GB with no daily limit, and other things remain same.
Thanks so much, Somit, for that. I have a great idea. We should start a new version of Ask BQ. Instead of people calling in and asking us about stocks, they can call in and ask Somit about... yes, they can ask you about data plans.
Or you could watch Bloomberg Quint on Vodafone Play. We are available on that too.
Oh, okay. That's good to know.
Out of time on the show. Thank you so much for watching.